Yes, this has been recorded. Okay, so we got some. Okay, we got some pretty good amount of people in here that don't understand exactly what everything is. So look, first thing I'm going to do is I'm gonna show you different kind of charts, right? And so I could come in here and I can put on price style, and do you see where it says plot style right here, candlestick? If I wanted, I could put in a line, right? How many of us know this line? Um, if let me take some of these other lines off, and then it'll be a little bit easier to see. So if I come in here and I hit edit chart properties and I change the price style to I just want to see the line, right? This is tells you basic information, price action, right? Where it is, where it's going. You can also come in here and you can say, what about Heiken Ashi? Let's do a Heiken Ashi bar, right? Or whatever you want, area. You can change it to whatever you want it to be, and you can see how it changes over here. And for me, my best one, I mean, you can do bar, you can do whatever. There's a lot of options. You can do these as well. These are very similar. They tell you about the same information, but they don't give you the hollow. So my favorite is the candlestick, right? I want the candlestick, and I want my selection here is fill based on open versus close. You can change that to net change. You can change it to whatever, right? And down bars are filled, right? That's what I have it selected to. And so this is what a basic candlestick is. Here, let me snip this. I just Googled elements of a candlestick, right? And this is a picture that they had. Is this readable for you guys? Can you guys read this right here? Yeah? Okay, so here, let's go through it. So upper shadow, right? We call those wicks, right? Wicks. This is a wick, right? Lower shadow, it's a wick up, wick down. That's all it is, right? These are all wicks, okay? Now, opening price, open share price on a green candle, closing share price on a green candle, right? That means it's green if what? If we close above where we opened. And then you have the body, okay? Now, on the red candles, your close share price is below your opening share price, right? So any questions on just that basic understanding? Because what happens is you get to the point where you can understand what's happening within this candle. So if I were to look into this candle, I'm going to see price action. Like if I looked at a 5-minute chart, I'm going to see price action doing this and then coming back down here, right? So within this candle, you're going to see this kind of price action, and you're going to see this kind of price action because that's where it went to, right? Now, what the hollows do for me, I'm going to explain the difference here. So let's see if I can find a... yeah, here we go. So do you see how this candle is filled? Right? Can anybody tell me why is this green candle filled? I got my daughter in here. Let's see if she knows what it is. Do you know why it's filled?
It's because it closed higher than the open. If it's green and filled, and if it's red and filled, then it closed lower than the open.
That's right. So it closed. You've got it, but you haven't quite given the exact. It closed higher. So this green candle right here, did it close higher than the open or lower?
Higher because it's green.
Is that right, guys? Is she right on that? She's saying that this one closed, the open closed higher. Let me tell you, she's not. She's incorrect. She's wrong.
Oh, no.
Right? So this is good that we're going over it, right? This candle opened up here. So the only time a candle is filled on my chart is if you close lower than you open. So this candlestick tells me we opened here and we closed here. So why is it green? Sugar Doc, there you go. Why is it green? Let's see if my little girl can get it. Why is it green, sweets? Why is it green and not red? You see how all these filled candles are red?
It's wait, no. It's green because it didn't go down.
It has to do with the day before.
Oh yeah,
okay?
it's higher than the candlestick before.
It's higher than the close of the day before.
Yeah.
Right? So the day before we closed at 95.20. This day we closed at 92.69. Wait, I'm sorry. 92.50, 92. So we closed 16 cents higher on this day. So was this day green overall? Yeah, it was green. We closed higher than the previous day. But we opened up here and pushed up, and then we just sold off and then did a little bounce at the end of the day. So if we zoom into this candle, right? Here, I'll show you if I duplicate this. And this, if for you guys that have TC2000, you can do this. So if I put this up here, I'm going to maximize my screen now. So if I want to look at this candle, right? This candle was 11:30. I'm going to zoom in onto 11:30 on, I don't know, let's see, what's a... let's go, can we get to a 15 minute? Yeah, it's right there. Can we get to a 10? Yep, there's the 10. What about a 5? Yeah, okay. So, you can see if I select this candle, do you see it highlights that area over here on the right? So, I'm going to zoom in, just to this area. And when I highlight this candle, I'm like, hey, what happened within this candle? That highlights it. So, do you see how we opened up high? We opened up right here. This is the top of this wick. Right? And so the top of this candle's wick over here is right here. This is your 5-minute chart. What do we do? Well, we just sold off all day and just made that wick down low, right? And so that's what created that wick right there. So this wick, this price action here is this wick. And then remember what I said? We bounced and then we finished about right here. Well, how did I know all of this from this one candle? How can I look at that candle and know exactly what's happening? Well, it's because of the charting. It's because it's filled. It's because I know that we opened here, closed here, right? So this is what this, I can get all that information. I don't have to look at the 15-minute chart. I can just look at this, and I can tell you what's happening on a 15, a 5, a 10, right? Does that make sense? So now let's see if we can find another one, but reversed. Okay, so I'm going to zoom back in. So do you see this red candle right here? Does everybody see it? It's kind of tiny. But what's so special about this red candle versus all the other red candles? What did it do? This one right there. Right, what's different between that one? Do you know, Sweets?
Is it because it didn't close lower than it opened?
Well, just, yeah, let's not break down why it's different. What's different about it?
It's not filled. It's
yeah, it's not filled, right? So this one's hollow. So if it's hollow, what does that mean, Lily?
It closed higher than the open.
That's exactly right. So what does that mean we did comparative to the previous day if this candle is red?
Means we went down.
That's right. So we closed lower than the previous day. So what this candle is telling me is, all right, for whatever reason, Disney closed the previous day at 93.94 and then gapped down to 93.29, right? And then what happened after it gapped down? You had the wick down, you had the push up, and then it closed right above the open and right above the open of that day and right below the close of the previous day. So that creates a red hollow candle. Okay? And so now if I go back and I want to look at all these charts, let's just, somebody give me a random ticker. Anybody? Random ticker. Baba? I like it. Baba's going to be good. Why is Baba going to be good? Baba would be a good one. Can you tell me, Daryl? This is extra bonus points for you. Why are we going to see a lot of filled candles that are green and a lot of hollow candles that are red? Why does that happen on this stock? Because you accidentally sold today? It's all right. We can get back in. No problem. But what? Yeah, Mark's right. It gaps a lot, right? Can anybody tell me why Baba gaps a lot? Why does Baba gap a lot? Well, because it's traded in another country. This is a Chinese company. And so we got to catch up to what's happening over there, right? And so this is a great example of why I want to see this stuff, because I want to know, hey, even though this is on a lot of other charts, this candle right here would be a red candle. But to me, it's like, no, it's actually closed higher than the close. And so I don't know if you guys remember this. As I was absorbing Baba into these areas, I was buying all these gap downs and selling on these pushes up. And I kept saying, man, it's interesting. Baba keeps gapping down and it just pushes. And I said, eventually we're going to gap down. It's going to push and it's finally going to hold. And so what this is telling me is every time that we've gapped down, we found buyers. Every single time. Gap down buyers, right? Gap down buyers. Right? We didn't gap down. Okay, great. Right? Gap down, still buyers. Gap down, still buyers. That's why these candles are hollow. So what does that mean? Well, as I'm sitting here and I'm absorbing Baba, I'm happy. Okay. I think there's a lot of people like me that think Baba's severely undervalued at this level, and these gap downs are a gift. So let me buy, you know how I do it, buy, sell, buy, sell, buy, sell, buy, sell, and I'm lowering my cost basis. And so now I'm sitting on about 10K shares of Baba with an average cost of the low 70s. 71, 70, 86, I think is the overall. And it's just, I just keep scalping down. And I actually sold some today. So Daryl, don't feel bad. I sold some too. But again, this is part of my plan. You're getting back up into this little resistance zone. I think we'll be able to get through it. But this is my routine. So Baba was a great example of that. Now, the next portion is what's the advantage, of candlesticks? Why do we use them? Well, the simple answer is data, right? Data. There's so much data within here that I can use to say, hey, this is open, close, gapped up, gapped down, right? I don't have to look at a 5-minute chart. So, yeah, so what happens is a red candle, right, that is hollow. What that means is we gap down and we closed underneath the previous day's close, right? But that means that people were buying down there, right? You see what I'm saying? Like people, when this gap down here, people are like, I think this is stupid. I'm going to buy some. Then it gapped down again. People did the same thing, right? And then it gapped down again and people did the same thing. Well, this time it didn't gap down. It opened right at where it was. And so people were just taking profits, selling off. And then the next day it didn't gap down again and they brought it right back. So every single time we gapped down, we went up. right here in these low 70s. And so what our job is as traders, number one is if you're a value investor, you got to find value in companies. If you're a technical analysis guy, you got to find chart patterns, right? Patterns of candlesticks, right? Can anybody tell me everybody type in, what is your favorite candlestick chart? Like, does anybody have a favorite that they just love? And then for extra bonus points, I'm going to ask you another question. Trade the Plumber, you have 1,000 shares at 85, need it at 100. It'll get there. Trader Plumber. I don't know what your overall plan is, but it'll get there. I think it'll get to 160, but that's my opinion. So W pattern. So here, this is so TTC said a hammer. Money said W pattern. What's the difference between TTC and Money 75? Anybody tell me? One's a pattern and one's just a candlestick, right? Right? Triple top's a pattern. One's a single candle, right? Yeah. So here, let's play a game. Let me pull up Tesla. Okay, you guys got to type it in before my little girl answers the question. You ready? Let's see if she knows these. I didn't give her any chance to study these. But can anybody tell me what type of candlestick this is right here?
It's the one with the fudge. I don't know what
it's a hammer.
called.
Yeah, you guys got it. It's a hammer. Yep, hammer. Okay. What about this one right here?
Okay, I got no idea.
Do you guys know this one?
Doji.
Yeah, doji. Yep.
Spinning.
Okay, so what's the difference? Can anybody tell me what's the difference between a spinning top and a doji? So what would this candle be considered? This would be more of a spinning top, right? You know, these that have more of a body, right? Those are more of spinning tops, right? And so a doji, the idea of a doji, like if this hammer, for example, if this hammer would have done this and just finished right at the open, well, this would just be considered a long-legged doji. But because it finished higher, it actually turns into a hammer. So what's the difference between a hammer and a long-legged doji? Both are extremely bullish, right? It's like, woo, it got down there and got rejected, right? It just closed a lot higher on a hammer, okay? All right, so now let's see if we can find a pattern. Somebody just give me a random ticker again. Wait, somebody said Apple earlier. We'll just do Apple. Can anybody find any pattern in this? Any pattern at all? What do you guys see? Yeah, I see a W for sure, right? You guys see that? Right, boom, boom. Now, for you guys that have been trading for me for a while, what is my favorite thing about this W chart? Can anybody tell me? Yep, you got that channel, right? You got that channel right there. So what's my favorite thing about this? Yeah, Dale got it. Dale got it. So right side lower than the left. Why is that my favorite? Why is it my favorite to have, you know, this is a shoulder and this is a shoulder. Why is it my favorite to have that be lower? Anybody tell me? Yep, there's flags here, right? There's lots of patterns in this chart. So, yeah, exactly, Johnny Mac. Yeah, Skater, exactly. So, for example, a lot of us that are trading Apple, and this is why as a newer trader, you're like, how do they know exactly where my stops are? It's stopped me out and went. What I want you to think about is just the psychology of what's happening. Well, they're seeing that everybody stops right below this low, right? it's not that our orders are in. It's just that's where everybody's going to put it, right? That's hey, as long as we maintain this, I'm good, right? Once that happens, what is the market maker's goal, right? They want everybody that's going to sell, because once you get out sellers, once they're gone, what happens? You rip, right? Now, let me ask you a question though. Because this was a lower low and it reclaimed, did we know it's going to rip? Right? Let's say it pushes up into, like right here. At this point, do you think I was like, all right, let's go, guys, load in the boat? I was actually loading the boat all the way up here, but it's for different reasons besides technical analysis. That's value. But according to technical analysis, as soon as we break this W and put in a higher high, right, then it's like, all right, off to the races. But look what happened just right here previously on Apple. What does it look like we're putting in? Oh, look. Maybe another W pattern, right? Oh, okay. Oh, okay. Well, shoot. Get back in there, close that gap. You know what I mean? Break above this neckline, off to the races. Apple back above here. Let's go, right? But what happened? Well, we came up and we closed that gap and rejected, right? Boom, down we go. So this is why I do what I do. I buy, sell, right? Buy support, sell resistance. That's just my trading style. Okay? So any questions on just the very basics of candlestick charting? Man, this Amazon chart is gearing up, man. Looks so nice. Pushing and testing that 150, broke it. It's holding. The fact that it's holding is pretty impressive. So, Girardi, let's see, he did what, 621s? That's what he bought. So he bought Girardi. I can't tell you what to do with your own account, but I tell you what I would do, right? If I didn't get in yesterday or whenever Nate got in, I would start sizing in slowly. So if you're like, is it okay to chase here? Well, in the middle of next year, is it going to matter if you bought at 75 or 73? Probably not. Does that make sense what I'm saying? But will it matter in a month if you bought at 75 when it's down at 70? Well, it could. Yeah, you could save $2 here. So what I would personally do is I would wait until I had some type of setup on any kind of chart that I had that in one of my edges, and wait for that to happen, and then I would buy it. So like on Baba, is there anything that's setting up right now? You've got an inside on the 30-minute. You that breaks up, great, buy it. Breaks down, let it come back down and close the gap. So that's what I would personally do. But I think next year, within the next 12 months, we're going to be well above 75. But again, it could be wrong. This is a value play. And this is the thing about the market is, I thought I was timing the bottom pretty good over here, and over here. It's like, okay, we're testing these bottoms. I think I'm doing pretty good, and I think this is the bottom. Well, no, it's not. More China bad news. And I'm not trying to get political here, but if whoever gets elected, be it Biden or Trump or whoever's running, if they're like, we hate China, it's going to be hard for BABA to go. I personally don't think that's going to happen. That's why I'm invested in it. But anyway, I hope that answers your question. John W. People will put stops just under the previous low, the first half of the W. When the second half goes lower, it flushes those people out since it hits their stop. Yeah, exactly. And, it's the thing to remember about this is why are we putting our stops there? Why are we putting our stops right below these levels? Well, it's because there's nobody there to support you, right? And so I don't know if you guys remember this, but do you guys remember this technical breakdown on the SPY at the end of October? So according to the technicals, what should we have done? We should have stopped out. And everybody was panicking and stopping out, right? So according to technicals, the right play was to stop out. That's what technicals are telling you to do. Well, guess what? Everybody knows this. So, for example, as soon as that happened, do you guys remember what I was saying? I was saying buy. Buy. I'm buying. I am loading up. I am loading mother effing boat. It had nothing to do with technicals, though. Right? It had to do with value and what I thought was going to be happening into the end of the year. So if you're just using technical, you have to stop out. That's what it's telling you to do. And everybody knows that that's what you have to do because that's what technical analysis tells you to do. Technical analysis was invented by value investors to try to screw out the people that are just playing technicals. You know what I mean? So once you understand what's happening, then it's like, okay, I get the game that's being played. So anyway. Let's see. Does Google's relative weakness give you cause concern if you were long? I've got March calls playing the weekly chart. Idea was buy off the 21 EMA. I thought it would participate more in the QQQ strength. No, it doesn't. Let me tell you why, Justin. I'm sorry, Google. I don't know if you guys, you new people, have ever heard me say this, but what I say is people can only stay away from tech for so long. Tech gets hit. Anytime tech gets hit, I'm a buyer. Because tech is in a new bull run, and we're going to be in a new bull run for a while, at least a year, I think. We're going to have a bull, and I think 4, to be honest with you. But we'll see. And so I think Google is one of the main drivers of that. So one of the things to think about, Justin, is why are you buying Google? Well, if you think Google's undervalued and you bought it somewhere, well, okay, then what you're buying is value. Price is just what you pay. That's it. Value is what you get. So if you go to the dollar store, or if you go to a flea market, or if you go somewhere that's selling these cheap products, and it's like, oh, man, this is normally $8 at Walmart. I'm going to buy it for $1. Price is what you pay. Value is what you get. So in my opinion, again, nobody cares what my opinion is, but I know the way that I value things is done by a lot of people that have a lot of money, and Google is severely undervalued. The reason that it's having this weakness is only because it gapped up 8-9% for its AI thing. That's it. And so if Google didn't do this gap, then we probably would have just slowly grinded up to this 135 area right now. And then we wouldn't look at it as weakness. We'd be like, oh, it's okay. Yeah, it's pushing a little bit. There we go. It only looks as weakness because of where we came from, right? So one of the things to remember about technical analysis is all you're measuring is human emotion. So you guys, what drives the market? There's only one thing that drives the market. Well, fear and greed is what makes the candlesticks go up and down. But yeah, it's earnings. It's earnings. Fundamentals. It's earnings. Earnings drives the market. So everything that happens in between earnings is everybody just guessing what the next couple earnings are going to be like. And so Google comes out and they're like, right here, this was an earnings drop. Everybody's like, Google's great. We love Google. Google comes out and they say, we are great. And they crushed earnings. But they said, oh, guess what, guys? Our cloud, we didn't hit our target by 2% on our cloud. So everybody was like, mother effer, I'm getting out of here. Google, you said you were awesome. You're not awesome. And what was I saying? I was like, yeah, I'll absorb this. I'll take all your shares, all you idiots selling, in my opinion, idiots, right? They think I'm an idiot because I'm buying their shares, right? And then it bounces right back up. And so all that's happening from here until the beginning of February, which is when Google reports, everybody's just guessing on what they think Google's going to report. That's it. I think Google's going to report amazing earnings. And so I think we're going to kind of grind, and then on February 1st, we're going to have a big gap up. That's my opinion. Does that make sense? Okay, any questions? You have any questions, Louise?
Some people asked to go over, one person asked to go over single candle patterns because you're doing candles right now.
Okay, yeah, you guys want to do quick candlestick patterns? Here, give me 1 sec. Let me see if I can find this. I'll share this document with you. I mean, it's they're on the internet. Let's see.
And then the person asked, are you buying Google Weekly?
Let me see. Let's see what this is. Would you guys like me to share this document with you? What this is you print it out, and it's just Q&A. You know, it's like flashcards. Name this candlestick. Name this candlestick. Right? This versus this, and then you're like, what is this called? Right? Name the black candlestick area. Then you have the answers just on the back side. You know, I can print this out for you. I mean, I can share this with you guys, and you can print it out. Name these patterns, right? If this is something you guys want. You know, you just print it out. It's just nice. You know, you cut them out in little flashcards. You can kind of carry them around with you when you're driving in the car or whatever. It's like, oh, okay, let's learn some candlesticks. Let's see. Yeah? Okay, here. Let me just... Is that... Again, you don't have to have Dropbox to access this, guys. You just click on it and download it for yourself. Here's a PowerPoint that I made. You know, this is common candlestick patterns here. So here, let's see. Can you guys read these, right? Ascending triangle, which is one of my favorites, right? Descending triangle, just a triangle, pin it, you know, channel down, falling wedge. And what's interesting about this, what most people think would be a bullish pattern or a bearish pattern, you know, it actually flips it. You know, you would think the lower highs would make this a bearish candle, but it's a bearish pattern, but it's actually not. And same to the flip side. Rising wedge. So you see how this rising wedge, it's like, oh, okay, we're putting in higher lows. No. So, you know, you got your one of my favorites is the inverse head and shoulders, right? I love this one. I love this one, right? You know, I love the flag, right? Double bottoms, W patterns, double tops. Those are all great. You know, see, you remember diamond bottoms, right? So diamond bottoms or diamond tops. This is what I was telling you about CRM. Again, you're just playing statistics when you're playing these. And the thing to remember is everybody knows what is happening and what it means when something breaks. And so when something doesn't work accordingly, we need to be aware of that to say, hey, there's a unusual thing happening here. Maybe there's going to be a break on a reclaim, right? Okay, guys. So what I'm going to do is I'll put together is Oberon in here? Is Oberon in here anywhere? Let's see. From what you said on Google, could you give us an example of what you would trade now in anticipation for the gap up of the new year? Yeah, I'll tell you what I would do, Ted, and then I'll tell you probably what Nate would do, right? Don't forget, my account is, I don't know, probably 10 to 100x your account, somewhere in there. So what I would do is buy the shares, okay? So for me, I'm loading up on shares, I'm selling some shares, I'm loading up on shares, I'm selling some shares, I'm loading up on shares. And guess what I do with those shares until earnings, and through earnings, actually. I actually sell to open calls against my shares, right? So I sold to open some calls on AMD on this day. I was able to take some profits on this day, but I still have some open. So if AMD finishes above 141, then my shares are going to get taken. I'm okay with that because I acquired these shares back in here. And then if we dip lower, then I can buy them back, just like I did over here, because some got taken from me at 120, 121, and then I bought them back. So that's how I do it. Now, how would Nate do it? Exactly what he's doing with Baba. If he's looking to play a few months run into, which I don't even know if he's in Google, but it has a weekly squeeze. And so all you'd have to do is you'd come in here and you'd put in Google on the weekly squeeze and use the rules of the trend pattern squeeze. Are we below the ADMA? Yes. Does that mean we're in a buy zone? Yes. Does that mean we should automatically buy? Not necessarily. Are we in a support zone? Come in here and break down the Google chart and say, well, yeah, it does. It looks like we're in a support zone coming in right off this level, right off the 21. Sure, yeah, I could buy it here. Yep, not a problem. Right? So yeah, you could buy right now. And if you wanted to play the earnings series, like those are the ones that Nate usually plays, you'd buy that weekly. Right? For me, I actually play a little bit further out a lot of the times. So for example, on Baba, I buy more in the money, right? So like when this price is at 80, sometimes I'll buy a $70 call for a year out. If it's at 70, I'll buy it at like 60 or 50. Like on AMD back here, I bought, I was buying like $50 calls when AMD was for a year or two out, when AMD was in this area, right? So everybody plays differently, but the overall thesis is, for me, Google is a good company. Google's undervalued. They're going to report good earnings. And I think people are overreacting to the cloud business. But all the bears are saying, well, I think you're underreacting to the lawsuit that's coming Google's way because of Fortnite. And I think you're underreacting to the fact that Google couldn't get as much cloud share because AWS and Microsoft Azure hold them tight. And my answer to that would be, okay, yeah, you're right. I don't know what's going to be happening with the legal, but I can tell you they could throw their entire cloud business away and never have revenue from it again, and they're still undervalued. Right? And so now what's negative? Oh, nothing besides the legal lawsuit? Okay, yeah. Well, guess what? Eminem had a legal lawsuit for billions and billions as well. But I was saying, hey, let's get long-term here for... And guess what? They came out and said, hey, we're going to pay billions of dollars to settle our legal fees. And so, okay, great. If you're making billions, it's not a big deal. So on Baba, they're literally they're floating like $30 billion. If they got to pay an additional $5 billion somewhere, is it going to hurt them? Yeah, but I mean, they're still going to make another $30 billion after that. Like it's still a good company. Hope that makes sense.
So, where is it? That one, wait.
I think you forgot what I forget.
Yesterday you showed us the TPS steps. Can you show it again, please?
Oh, yeah. So we'll do that here. Let me find it. Here we go. Here's the TTM, TPS, TTM, right? That's what that is.
And let's see.
CQC, man, that took me longer to learn than anything. Longer than learn than charting. Longer to learn than. And the reason is because everybody values things different ways. So you've got PEG ratios, you've got forward PE ratios, you've got price to sales ratios, right? You've got all these different ratios that people will start throwing at you. They'll be like, well, it's trading at 1x its value. You're like, well, what's your X? And you're like, well, it's forward price to earnings ratio. Okay, well, you're not taking into account the full picture, right? Because you're missing this. And so every single ratio, it's like there's certain things that get left out. All right, well, its price to sales ratio is really low. I mean, really high. I think it's overvalued. Or it's really low. I think it's undervalued. Well, the undervalued one has low cash on hand and $1 kajillion in debt. Well, shoot, I don't want to touch that. They might go bankrupt, right? And so there's all these different things that you want to look for. But what I would tell you, the most important thing for me on the balance sheet, right? You need to look at the balance sheet and you need to see how much free cash flow they're getting. Free cash flow. Can anybody tell me why that's important? Why is free cash flow so important? How much are they generating in free cash flow? Does everybody know what free cash flow is? Again, if you don't know what something is, all you got to do is Google, say Investopedia, free cash flow. Investopedia, hammer candle. Investopedia, whatever, right? Free cash flow is the money that the company has available to repay its creditors or pay dividends, interest to investors. Some investors prefer to use free cash flow per share rather than earnings per share, right? So there's something that you can use as a measure of profitability because that metric removes non-cash items on the income statement, right? So, for example, when you're making a lot of money and you're a great company, what happens? You guys remember, right? Hold on to Costco, guys. Hold on to Costco. I love it. It's a great company. Hold a piece. You know, if you don't want to hold through earnings, I get it. Whatever. But what did Costco just declare? Costco said, you know what, man? We're so good at managing our company. We're making so much money, right? Let's just give $15 back to our shareholders. So they're going to pay a $15 dividend. Why? Because they got free cash flow. They're sitting in the money and they're like, man, we got so much money, we don't know what to do with this. Let's just pay back a $15 dividend. And boom. Now we're all going to be $15 richer for our shares of Costco. Does that make sense? If I was just starting out, would you play patterns or candles? Are you saying either one? I play both. Yeah, 100%. That's all part of technical analysis. Yes. Yeah, exactly, Steve. Also to buy back shares. So BABA, for example, has another $14 billion that they're going to be buying back. And I can promise you this, Jack Ma and everybody is loading up, I think, on BABA down here.
Thank you, 3P. I saw your comment. It's my job to read the chat because my dad is so disorganized.
I can't keep up with all the chat, right? Oh, man. So let me show you something here, 3P as well. You always want to double check, but has anybody used Bard? When is cost paying its $15 dividend? There you go. Now it's yesterday. Record date, December 28th. Do you guys know what record date means? It means you must be a shareholder of record on this date to be eligible for the dividend payment. You're going to get $15. Right? So you can just come in here to Google Bard and ask them those questions and they'll answer it. So check this out. If I'm like, tell me about costs earnings report from yesterday. Let's see what she says. Or he says, or whatever Bard is. All right, and you can come in here and it's going to pull it from the internet. Key points, right? Boom, 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 boom. Wow, 98% retention rate. Special dividend announced. You know, to be honest with you, same store sales being up 0.07 isn't that great. And then it tells you the sources, so we can come in here and we can click on this and we can look at their press release, right? So again, there's a bunch of different tools at our disposal that we can use to try to figure out what's going on within the market.
And by the way, I'm 12 years old, but I'm about to be 13 in January.
She's turning 13. Yeah, so what Pete says, guys, is what's supposed to happen is when a company pays out a dividend, it's supposed to drop that amount. Rarely does that happen. It never happens that way. Like that's how you dividend strip. But I can do another lesson on dividend stripping. But okay, I think I'm gonna cut this recording. It's about an hour long. I think that's plenty.